Ever since UPMIFA, Allen, you've told me that FASB is likely to make changes in the net asset classification structure. So, under ASU 2016-14, the present 3 classes of net assets are going to be replaced with 2 classes of net assets. Does that entail something simple, like just dropping one of the existing 3 classes?
Well, yes and no, Mike. Let's go back a little bit in time. You mentioned UPMIFA, which is the Uniform Prudent Management of Institutional Funds Act. It was passed several years ago by the National Commission on Uniform State Laws, enacted by 49 of the 50 states. Only Pennsylvania hasn't enacted it because they're a trust law state. But under UPMIFA, a not-for-profit can spend some portion of its endowment principal or corpus. They have to meet certain parameters, certain requirements of prudence. There are certain factors they have to look at. But the point is they can spend what we've always considered to be permanently restricted net assets. Well, if you can spend permanently restricted net assets, they're really not permanently restricted. FASB had to really start talking about whether or not there's such a thing as permanently restricted net assets. And let's just say that the line is now blurred between temporarily restricted and permanently restricted. So it's not a matter, Mike, of dropping permanently restricted net assets, but of combining temporarily restricted and permanently restricted into a new classification, net assets with donor restrictions, and the second class being net assets without donor restrictions. And within each of those 2 classes, there will be greater disclosure of how and when net assets may be used. So there are even unrestricted, or what we'll now call net assets without donor restrictions, will still have certain disclosures as to limitations on the use of those assets.